The collapse of crypto's hottest trade. Bitcoin finally breaks away from stocks. What happens next? Welcome back to Mindful Money and Meals. I'm Felix. And today, we're diving into one of the biggest financial turning points of the decade. For the first time in more than 10 years, Bitcoin is set to split away from the stock market. A divergence we haven't seen since the early days of crypto. This is huge. This is historic. And this could change everything about how investors think about Bitcoin, whether it's a speculative bet, a hedge, a technology asset, or a truly independent global store of value. For years, Bitcoin has moved almost in perfect rhythm with the Nasdaq and the S&P 500. When tech stocks went up, Bitcoin followed. When markets crashed, Bitcoin was crushed even harder. But now, something strange is happening. Crypto's hottest trade, the idea that Bitcoin behaves like a risk-on tech stock, is showing signs of collapsing. Today, we're going to break down why Bitcoin and stocks were correlated for a decade, why that relationship is now breaking apart, what this divergence means for crypto's future, how institutions, ETFs, and global macro events are reshaping Bitcoin, what investors should watch before the next big move, and finally, whether this marks the beginning of Bitcoin becoming digital gold or the beginning of something far more dangerous. So grab your coffee, sit back, because this is one of the most important episodes I've ever made. Section 1. How Bitcoin became correlated with stocks. To understand why this divergence is such a big deal, we need to go back to the beginning. Bitcoin wasn't always tied to the stock market. In fact, from 2009 to around 2016, Bitcoin traded in its own world, driven by innovation, early adopters, halving cycles, and pure speculation. But everything changed after 2017. That's when institutional attention exploded. Hedge funds, trading desks, and quant firms started treating Bitcoin as just another risk asset. It entered the big leagues, which meant Bitcoin was added to portfolios alongside tech stocks. Funds used macro models to trade it. Bitcoin rose when liquidity was high and crashed when markets panicked. By 2020 to 2021, Bitcoin's correlation with the Nasdaq reached record highs, over 60%. That's shockingly high for something that was sold as digital gold. But the pandemic era made it even worse. Governments printed trillions. Stimulus checks flooded markets. People bought Tesla, Apple, Nvidia, and Bitcoin. With easy money everywhere, everything went up, together. So for nearly a decade, Bitcoin wasn't a hedge. It wasn't an inflation protector. It wasn't a safe haven. It was a high-beta tech stock, moving in sync with the very market it was supposed to protect people from. But then something shifted. Section 2. The first cracks in the system. The correlation began to crack in late 2023. Why? Because three forces started pulling Bitcoin into a new category. 1. Spot Bitcoin ETFs, the game changer. BlackRock, Fidelity, ARK Invest, the titans of global finance, finally entered the arena. This opened the door to billions in slow, steady, institutional inflows. This wasn't casino-style trading. This was long-term accumulation. 2. Scarcity versus unlimited fiat. As global debt exploded past $330 trillion, inflation became a structural problem, not a temporary one. Investors began seeing Bitcoin not as a gamble, but as an escape. 3. Geopolitics, wars, sanctions, capital controls. Bitcoin suddenly became relevant in a world where money is no longer guaranteed to move freely. These three forces weakened the link between Bitcoin and stocks, but didn't break it. Not yet. But then came the turning point. Section 3, the split. Bitcoin goes its own way. As 2024 rolled into 2025, analysts began noticing something unusual. For the first time in a decade, Bitcoin began rising while stocks struggled. This was the moment the media called the collapse of crypto's hottest trade. The old trade? Crypto equals tech stock with leverage. That trade is dying. Here's the data behind the divergence. When the Nasdaq dipped, Bitcoin held strong. When inflation numbers shocked markets, Bitcoin didn't fall in the same way. When bond yields spiked, Bitcoin barely reacted. It was subtle at first, then undeniable. Bitcoin was acting differently, and that terrified Wall Street because their models no longer worked. This divergence suggests one of three outcomes. Scenario A: Bitcoin becomes digital gold, a true non-correlated asset, a macro hedge, a store of value independent from central bank policy. Scenario B: Bitcoin becomes a geopolitical asset, used by countries facing sanctions, currency crises, or unstable regimes. Think Argentina, Turkey, Lebanon, Nigeria, nations where the local currency is evaporating. Scenario C: Bitcoin is entering a pre-bubble phase, where newcomers pour in, not understanding how fragile the ecosystem can be. The truth is, we are at an inflection point, a crossroads. Bitcoin's split from stocks could be the start of a new era, or the final calm before a storm. Section 4. Why crypto's hottest trade is collapsing. The old narrative is dead because the drivers behind Bitcoin have changed. 1. Liquidity isn't driving Bitcoin anymore. In previous cycles, Bitcoin pumped when central banks printed money. Now, even as liquidity tightens, Bitcoin stays resilient. This means retail speculation is no longer the backbone. Institutions are. Second, spot ETFs create pension-style demand. When ETFs rebalance, they buy, regardless of price. This is slow, mechanical, constant buying pressure. 3. Halving cycles matter again. Every halving historically marks a shift in narrative. This time, it's happening right as Bitcoin breaks away from stocks. Less supply plus rising institutional demand equals pressure cooker. Fourth, global distrust in traditional finance. From bank failures to government debt crises, people are losing faith. Bitcoin feeds on distrust, not chaos, but distrust. The more unstable the financial system becomes, the more attractive Bitcoin looks to everyday people and institutions alike. Fifth, AI-driven trading models broke. Quants spent years building algorithms based on Bitcoin's correlation with stocks. Those models no longer function. When AI-driven funds don't know how an asset behaves, they stay away, or they chase momentum blindly. Both create volatility, which brings us to the big question. Section 5. Is this good or bad for Bitcoin? Let's break it down honestly. The bullish interpretation Bitcoin is finally becoming what Satoshi intended, a sovereign, non-correlated asset. A hedge against inflation and debt. A reserve asset for nations and institutions. A store of value detached from stock market cycles. This is the digital gold thesis, and right now it's stronger than ever. A split from stocks means Bitcoin is maturing, becoming part of a different financial universe. The bearish interpretation. Divergence can also signal instability. If Bitcoin rises while stocks fall, some analysts fear a liquidity crunch is coming. People might be fleeing risk assets and parking wealth temporarily in Bitcoin before a bigger crisis. In other words, Bitcoin isn't diverging because it's strong. It's diverging because the global economy is weakening, the middle ground. Both could be true. Bitcoin may be entering a phase similar to gold in the 1970s. Inflation rising, currencies weakening, debt exploding, geopolitical tensions escalating. Gold skyrocketed in that era. Bitcoin could do something similar, but with 10 times the volatility. Section 6. What happens next? The forecast. There are 3 realistic paths from here. Path 1. Bitcoin decouples and becomes a safe haven asset. This is the dream scenario for long-term believers. Bitcoin moves independently, up during inflation, neutral during stock downturns, strong during currency crises, useful during geopolitical conflicts. If this happens, Bitcoin joins gold and bonds as a foundational macro asset. Path 2. Bitcoin recouples violently. This is the danger. If a global recession hits and markets collapse, Bitcoin might reconnect with stocks, but on a delay. Meaning, stocks fall first. Bitcoin holds for a while. Then, Bitcoin crashes later, and harder. This is exactly what happened in March 2020. History could repeat. Path 3. Bitcoin enters a transformative adoption phase. With ETFs, global adoption, institutional buying, and technological progress, Bitcoin could become bigger than the stock market narrative altogether. This would be a new asset class, not tech, not gold, not currency, something entirely different. Section 7. What should investors watch now? Here are the key indicators that will reveal the truth behind the divergence. 1. Bitcoin ETF flows. If inflows remain strong even during stock downturns, Bitcoin has truly decoupled. 2. Volatility Index, VIX. Watch how Bitcoin behaves during fear spikes. If it holds steady while markets panic, that's massive. 3. Interest rate policy. If Bitcoin rises during rate cuts and rises during rate hikes, it's becoming macro-neutral. 4th, US government debt spiral. The worse the debt problem becomes, the better Bitcoin tends to perform. 5th, geopolitical tensions. War, sanctions, currency freezes. These force nations and individuals to seek alternatives. Bitcoin thrives in uncertainty. The Felix conclusion. So, is this the collapse of crypto's hottest trade? Yes, and no. Yes, because Bitcoin is no longer just a risky tech asset. And no, because something even bigger is emerging. We are watching, in real time, the rebirth of Bitcoin's identity. For the first time in a decade, Bitcoin is standing apart from the markets that once pulled it in every direction. Stocks are stumbling, bonds are collapsing, currencies are weakening. And Bitcoin is doing something extraordinary. It's acting like an asset with a future, not a fad from the past. That doesn't mean it will rise forever. Bitcoin remains volatile, unpredictable, and capable of extreme corrections. But one thing is becoming clear. Bitcoin's next chapter will not be written by day traders, or meme investors, or hype. It will be written by institutions, nations, and global macro forces much larger than any of us. We are entering a new era, one where Bitcoin must prove what it truly is. A technology, a currency, a hedge, or a lifeboat for a system under pressure? Only time will tell. But whatever happens, I'll be here to break it down with you. This is Felix, and this was another Felix Exposé. Stay mindful, stay prepared, and stay smart out there. If you liked this content, please like and subscribe. See you next time.